Have all your Delaware clients filed their annual taxes? The deadline is March 1st. Stick around and I'll show you the method that will save your clients thousands. Hey, it's Nikki and this is Startup Divas. Most of our startup companies form in Delaware for various reasons we discuss on other videos. Like most states, Delaware has an annual filing requirement. Each Delaware domestic corporation, that is, companies that were formed in Delaware, must file an annual report by March 1st every year. We're talking only corporations, not LLCs. LLCs are different. We'll cover that in another video. The Delaware Annual Report is a combination of the annual franchise tax report and company information, such as the company's principal address, the directors, and the officers. The filing is online and it is much easier than many other states. For example, California requires two separate filings: an annual statement of information that's filed with the Secretary of State, and that you file your taxes with the Franchise Tax Board. Now let's talk about how to file and what you need to file before the March 1st deadline. Here are the steps to take. Go to the Delaware Division of Corporations website and search for the company. We'll have the links in the YouTube video. Select the company and copy their Delaware file number. Now go to the Delaware Franchise Tax website and you're ready to file. To file, enter the file number into the Delaware Franchise Tax website and continue to the filing page. Select the year of the filing. If you see the words File Amended Annual Report, you know the company has already filed a report and you're done. If, however, it says File Annual Report, the company still needs to file. As you review the tax form, you may notice there is a very large dollar amount for taxes. Don't be alarmed. There are actually two different filing methods to calculate taxes in Delaware, and the company will only have to pay the lesser of the two. The first method is based on the authorized shares of the company. The second method is based on the issued shares and total gross assets of the company. The Delaware site will show the asset method, which is usually a lot higher tax. The Delaware site will show the taxes for the asset method, which is usually much higher. If you're looking for guidance, the Delaware Secretary of State website has an online franchise tax calculator site to assist you. I recommend you provide that link to your clients and also recommend that they speak with their accountant to determine the best method for filing their Delaware taxes. To be proactive, you may want to reach out to your clients in January every year to remind them of the deadline and to educate them on the two different methods of filing their taxes. I actually have a form email that I send every year to my clients just to remind them. I usually check all my Delaware clients again in March just to make sure everyone has filed on time. That way they won't be hit with any penalties. You may want to keep a list of your Delaware clients and refer to it. Spend a few minutes every day looking on the Delaware site just to make sure that everyone has filed their taxes. If your clients do not file for a year or two, the company will go out of good standing and could be administratively suspended by the Delaware Secretary of State for non-filing and non-payment of their taxes. Thankfully, Delaware is really helpful with getting reinstated, but it is definitely not something that you want to do, and especially not something that you want to have surprise you when the client is getting ready to go into a financing. I cannot tell you how many times that has happened. If you do not reach out to your clients to educate them, they may mistakenly file and pay the higher tax amount when they actually qualified for the minimum tax amount. If you let them know the difference, you can save them thousands of dollars. Thanks for watching. Be sure to like and subscribe for more information from Startup Divas.